I believe that we're at an unprecedented moment here in the financial services industry. We've entered a new era, whether we realize it or not. And the best way to think about our collective world here together is we're together in a FinTech ecosystem full of these amazing, rich partnerships like we have not had before, at least not in this industry. So in that ecosystem, this FinTech ecosystem, it rests on a culture of collaboration and a culture of partnership that in some ways is kind of new for us. So we're going to talk about how we got here, why I believe we're here, and where we can go together moving forward. First, I want to talk about this FinTech term I'm throwing around here. Right? This term's, it's got different meanings. And we use the original meaning of FinTech, okay? So we're talking about products and services that serve the financial services market. That's it. That's simple. Technology-enabled products and services for the financial services market. We're not using that latest, disruptor or interloper version of the definition. We'll get to them. We're going to talk about them. But the FinTech, as we think about it, it goes back to the 50s with credit card, electronic payments starting. ATMs in the 60s. There is a long, rich history of FinTech, the way we think about it, enabling financial services. And as great as that history is, I think the future is going to be even more important. Okay, so what's going on? What about this new era in FinTech? So in 2 words, technology externalization. That's a mouthful. We're not going to say it that many times. But that's what it is, right? We're at a point here where we're looking at the market, and the market is turning to partners for technology answers like never before, right? Gone are the days when any bank, including the biggest banks, build all their tech stuff in-house, right? Homegrown is going out of fashion. So I've been on the vendor side of this market for over 20 years, and I've never seen anything like what we're encountering right now. This change is industry-wide, it's global, and it's here to stay. So how do we get here? I think there's 4 trends that really have converged to create this moment, to drive this technology externalization, drive this reliance on outside tech partners. Innovation acceleration, open banking, increased regulation, and the disruptors. So let's start with innovation acceleration. Look at this word cluster. So you're all familiar with the trends that are driving our space. And there's, it's familiar to us, right? There's digital channels up here, cryptocurrency, blockchain, artificial intelligence, no surprises. What's interesting, though, is if you take this word cluster and take it back 3 or 4 years, and you remove from it the trends that weren't driving our space 3 or 4 years ago, look what happens. It thins out pretty quickly. So what that means are there are a bunch of trends driving our market today, driving our space today, that really weren't top of mind and really weren't driving it the way they're driving it today. So the point is these trends and the technologies wrapped up in these trends are advancing incredibly quickly. So look at these product lifecycle curves. So this is time across the bottom, right? These are tech-enabled product lifecycle curves, classic S-curves, or at least they're S-curves the further out you get. But as you get into current times here, look at the compression that's happening. Right? These product lifecycles are getting shorter and shorter and shorter. The S-curves are becoming I-curves. Right? This is a big change. What does it mean? What's going on? It means end-user adoption is getting faster and faster and faster. It means innovation is getting faster and faster, the pace of innovation. Product refresh cycles are getting faster and faster. Right? R&D that has to fuel all this is getting bigger and bigger. We got more PE and more VC money in the FinTech market today than we've ever had before. And there's no question, part of what's going on here underneath all this, part of the fuel is just the tech infrastructure is advancing, right? Just the technical plumbing underneath all this stuff is advancing. Like things like Moore's Law just marching forward, right? It makes a difference. It adds up. Broadband, advances in broadband make a difference. We're actually seeing business models from the 90s, right? They're flying off the shelf now. Why? Because the tech infrastructure is fully and finally caught up with those business ideas. So let me just give you one quick example of that in the cryptocurrency space. Okay, how many of you have heard of eCash? eCash, this is a VC-backed company from the late 90s that I led. We like to think of it as the sort of the original cryptocurrency. And yeah, the logo kind of looks like it's from the 90s, right? It's kind of retro cool. It's actually nice to see it up here again. It is. And in some ways, it sort of makes me feel like I'm still getting my money's worth from what we paid to have this logo designed. $500,000. Man, if you didn't experience the 90s were awesome. They were awesome. They just went too quick. But this was a cryptocurrency. It was anonymous. It was electronic. It had some cool crypto tech in there, some blind signature patents. But the eCash story was ahead of its time. It was ahead of that tech infrastructure I was just talking about. We didn't have broadband. We didn't have always-on computers. That was weird. We didn't have that. When you wanted to use your computer, you turned it on. And when you're done, you turned it off. We had dial-up modems. This is one of the most irritating sounds known to man. Some of you have probably never heard it. Go YouTube it. Yeah, there were no smartphones. Like, forget eCash. How did we even live back then? I don't know how we did it. So we sold eCash. It was acquired by a company called InfoSpace, another internet company. InfoSpace had a market cap greater than GE for a while. That's a story for another time. Interesting story. Involves some jail time, not for me. Yeah. Stripe and Bitcoin. We'll talk about it tonight. So continuing this progression of cryptocurrency, so the new darling in cryptocurrency, and it's not new, Bitcoin's been here for a while, but Stripe just announced that it is dropping support for Bitcoin transactions. But somehow now, they become this bellwether for which payment types work for merchant acceptance. And they have decreed that, Bitcoin, what they said was, it's great as an asset. It's just not a great transactional currency. Like, by the time you settle it, the price can change. It doesn't work. It's a headache. Costs too much. So if this use case goes away for Bitcoin, this is a huge deal. And look at this SEC tweet. Right? At least they have a sense of humor. I don't know how many of you saw this or know what's underneath this, right? So this is real. So this is a real tweet. Underneath this is the SEC has had to lay down recently some new regulations because there's a bunch of companies out there that have nothing to do with Bitcoin, nothing to do with blockchain, but they're putting it in their name or they're putting it in their mission statement just to hype their stocks. And it's working. There's people making a lot of money. If they get out at the right time and out at the right time, they're making a lot of money with these stocks that were moving. So they had to get that under control, and this tweet was just a way of them making a little light of it. So don't blink. Things are moving fast. And I wanted to share this quote from Bill Gates. It's a cautionary note. So think about those. It's very true, right? Think about those word clusters and how much they change in 3 to 4 years. Think about how blockchain is kind of crept up on us. So, yeah, we know it. Things get overhyped early on, but we also have a tendency then to get nonchalant and kind of let it lull us into a false sense of security about what kind of an impact those trends that got overhyped early can actually have over time, like real impact. So we've got to pay attention to what's happening and not get nonchalant once we get past that period of overhype. So let's get to the next trend driving this tech externalization, open banking. So this term is getting thrown around a lot. It gets thrown around pretty loosely. It gets talked about often in the context of open APIs. And it's really just opening up banking systems so they can talk more easily with third-party partner software and systems, making it easier to exchange data, share data, making it easier to access partner business logic, partner functionality. There was a recent Accenture study. 99 out of 100 bank executives at major banks said they're going to be making major investments in open banking over the next 2 years. So this is here, this is happening. And I would argue that the seeds, though, for this were sown 27 years ago, 1991, very specific. Because of this guy, right? This was the beginning of the open source movement. That's when Linus, right, he released the first open source Linux kernel, 1991. That was it. That was the first domino that fell, right? I would argue that as soon as he released that kernel, this day in open banking was inevitable. That was the first domino to fall that created this moment of open banking. And it was heresy at the time. I mean, 1991, it was craziness in our space to think about something like open source in the financial services industry. There was fear, uncertainty, doubt, and rejection of change. Here we are. So let's get on to the next trend driving this externalization. So increased regulation. You know a lot more about this than I, so I'm not here to tell you about it, but I do think it's a big factor in driving this trend. So the point here is post-2008, it was a regulatory tsunami. We know that. And there's going to be some rollback here, undoubtedly. I think you might hear a bit about that from Maria tomorrow morning. But it's not going to change the overarching step up in compliance and the costs that go along with that. You know, the largest banks out there have regulatory compliance teams in the thousands. IT budgets are consumed with regulatory compliance projects. Right? It's just a massive investment, and it's continuing. And it continues to crowd out investment that might otherwise go to technology innovation. And there's one final trend I want to talk about, and that's these disruptors. So I know we're all very aware of the disruptors in our space. You know, it seems like the whole world, when you read about whatever market you're looking at, the whole world's getting disrupted, right? Every business is somehow getting Uberized. I don't even know if that's a word. Give it a year, it will be. But as we look across consumer markets generally, it's still the FANG group that's driving that high bar for digital experience for consumers, for that great user experience. Right? So Facebook, you got Amazon, Netflix, and Google. That's the general standard. And then within our space, specifically, say what we will about these disruptors, they are creating the UX standards within our space to a great degree. And so they're not all going to last. There's a shakeout that's happening in that space. Let's see how the alternative consumer lenders make it through a full credit cycle. So even though not all of them are going to last, their impact on the consumer experience and the user experience, that's going to last. That's going to have lasting effect. So we know who the Joneses are, and we just got to make sure we keep up with the Joneses, especially as customer experience becomes synonymous with digital experience. So let me wrap up on this technology externalization point. So what I'm saying is there are 4 key trends that are driving this moment, right? They're driving this reliance on partners for technology answers like never before. And it's happening at a time when the bandwidth to make investments in technology innovation outside of compliance is harder than ever before. So look at these headlines. So whether we realize it or not, this ecosystem of partnership that we're talking about, it's here. We're in it. We're already in it. And we're seeing it firsthand. I'm going to share some examples of what this looks like today for us already. So it's an awesome culture of partnership. It is great. So the question is, what does that look like? What does that successful partnership in this new era look like? So it starts with what we bring to the party. So you saw in the opening clip, I mean, the financial services industry contributes 7% to this country's GDP. It's a huge deal. And outside looking in, your brands are amazing, right? The brand equity and trust is incredible. Right? The depth and loyalty of your customer base is most businesses would kill for that. The talent that you have, the ability to operate in a highly complex, sophisticated, regulated business model. You're in the business of trading risks. That's hard to come by. And then your branch networks still matter, apparently. I mean, yeah, there's some trimming left to occur, undoubtedly. But this talk of branchless banks seems like that's gone. It was interesting. I just noticed on the weekend, I'm sure some of you did as well, Movin, Brett King's Mobile First Bank, they just announced they're going to acquire a U.S. brick and mortar bank. How ironic. So we, on the other side, taking your FinTech partners, use us as an example. We're not the only ones. But deep digital talent, not only the expertise, but lots of it, right? Lots of it. And deep understanding of our solution landscape. So we, in our M&A travels over the last few years, we've looked under the hood of over 150 companies. We've really gotten to know over 150 companies, and there's a bunch more that, based on what we knew about them, we didn't think it was worth looking under the hood. And we've acquired several of them. But the point is, we know what's out there. We know what's out there in the solution landscape because we're combing through it all the time. We're growing organically and we're growing inorganically. So our strengths, I think, when you sit back and look at our respective strengths, they're incredibly complementary. So your understanding of your business needs and your use cases, far better than we'll ever have. We'll collaborate to get better, but far better than we'll ever have. And our understanding of the solution landscape and how to assemble great solutions, that's what we bring to the party. And it's at that intersection of your business and technology where our partnership comes together, right? That intersection point is where we partner. So just to be clear, I am not talking about some new order here where you rely on your FinTech partners for all things tech. That's not what I'm talking about. You will all draw your lines in different places. But what I am suggesting is wherever you've been drawing those lines historically, it's going to change. You're going to move those lines, and they're going to move forever. I saw this phenomenon back in the 90s. So I was with a vendor. We were a tech vendor, software company. We were in the supply chain logistics space. And there were big problems in that, big inefficiencies. I won't get into the details, but supply chain inefficiencies. And it was ripe for optimization algorithms. And so we worked incredibly closely with the market, with several clients, to understand their business needs. Like what was the real problem? What were the use cases in their business that they were trying to solve for? Where did they need to gain efficiency? And then we built amazing solutions that met their needs and met the whole market's needs. Right? We coined that co-development, and together we lifted up that whole marketplace with our clients. And having seen that kind of deep partnership helps me, I think, recognize it when I see it happening in our space today. So let me give you a great example of this kind of ecosystem partner alliance we're talking about. First of all, I want to go to a different industry for this example. So it's a story you're all, I think, familiar with. So we all know Netflix, and this is sort of a confession time. How many Netflix bingers do we have out here? Yeah, that's probably the most hands we're going to see go up for any question today. That was good. Good. I appreciate the honesty. So the Netflix story was back to 1997. And what some of us may not know about the story is just how important partnership was to what Netflix did. Even their initial foray, right? DVD by mail. Right? They disrupted Blockbuster. But just that, they required a whole set of supply chain logistics partners. It was very complex to set up that first business, and they did it with a bunch of great partners. And there was Blockbuster. They had cassettes. They had DVDs. They had 9,000 brick and mortar stores that they were super proud of. I'm sure some of you remember wandering aimlessly through Blockbuster aisles trying to find a movie. It was the hardest thing to do. 45 minutes later, it's I guess it's too late to watch a movie, so I'll just go home. So Netflix got into video streaming, right? They did that in partnership with AWS. They didn't have any kind of back-end infrastructure to support on-demand streaming, dynamically dialing up capacity as we wanted to watch movies. They did that with a great partner. Blockbuster stuck with his DVDs right in the stores. Then Netflix moved into original content, partnering, licensing content from studios. It started with House of Cards. Blockbuster stuck by its DVDs in its stores. So in this little story here, Netflix basically had 3 different business models it went through, kind of 3 pivots. And it did that, orchestrating it across a bunch of partners. Blockbuster didn't pivot once. Not once. Blockbuster filed for bankruptcy in 2010. So here's the craziest part of this story, right? Blockbuster, they considered and could have acquired Netflix for when they were a $270,000 business. But they thought, we got this awesome, super awesome brick and mortar channel, 9,000 stores. We don't even have more by next year. And that channel is going to give us a sustainable competitive advantage. So the lesson here is that Netflix, they just understood how to leverage their partners in their ecosystem in a way that Blockbuster wasn't thinking about. And it let them advance their business in a way that Blockbuster didn't. They could have, but they didn't. Okay, so for those of you who haven't had a presentation with me before, it's not complete without some kind of a sports quote or reference, and there may be more, I'm just saying. So we got the great one here, Wayne Gretzky, and I think you probably all have seen this quote, and I share it because it's about strategy. So in this new era of partnership, it's really important that we come together on strategy, that we get aligned on our point of view about where the market's going, or whatever part of the market we're looking at, where it's going, how quickly it's going there, right? And using Wayne's language, that we get aligned around where the puck is going. That level of strategic alignment is critical. So we have a special opportunity in the next couple of days, among other things, to do some great work together to advance this culture of partnership, to advance this culture of collaboration. And in doing that together, we can lift our whole industry. Let's make it a great event. Thanks, everyone.